Well, a good evening to you and welcome to the show. My name is John Jacob Curie and this is Beyond the Headlines. And welcome to the show. At a particular time like this, the banking sector is troubled. In the last 12 months, the Imperial Bank, Dubai Bank, and now Chase Bank have gone under. Chase Bank placed under receivership by the Central Bank of Kenya. The inconvenience caused to customers, also with a cloud of doubt hanging in the minds of investors as well as those who are in the banking sector on how long can this be sustained, and most importantly, is the banking sector collapsing? Is what we'll be discussing this evening. And of course, let me introduce my panel very quickly. I've got Habil Olaka, who is the CEO of Kenya Bankers Association. Thank you very much for joining us, sir.
Thank you.
I also got Duncan Lumwamu, an investment analyst in Sinton Investments. You're very much welcome.
Thank you.
And I also got Joram Mwinamo, who is also an account holder at Chase Bank, one of the guys inconvenienced by this being placed under receivership. And he'll be telling us his story. And of course, later on, I'll be joined by Captain Retired Colin Swanderi, who is a lawyer and the chairperson, Kenya Institute of Forensic Auditors, to help us again in this conversation. But before we start this conversation, Jen is on standby to give us a head start on how you can participate in this conversation. Jen.
Thank you, Jacob. A warm welcome once again to Beyond the Headlines. I'm Jane Wambui. Now, in today's discussion, we will be putting focus on the banking sector in Kenya. In light of some of the challenges that have been facing our banks in the recent past, we're asking you today, is our money safe? As a banker, do you think that your money is safe? We would like to hear from you, so go ahead and talk to us. Our SMS line is 20511. On Twitter, our handle is at KBC Channel 1, hashtag Beyond the Headlines, and on Facebook, our page is Beyond the Headlines. You could also send us an email. Our address is bth@kbc.co.ke. Do leave your name and location. We will be sampling your views and comments as we go on with the show. But for now, let's get with the conversation. Back to you.
Thank you very much, Jen. Indeed, let's start this conversation. We'll start from the question asked by Jen, and we'll start with the Habil. Should we trust banks to keep our money safe?
I think that's an interesting question because of the time we are in right now, and given the events that you have just witnessed in Kenya. I think it also arises out of the fact that given what happened at Chase Bank, and the previous year we had the Dubai Bank case and the Imperial Bank case. I think it tends to create the impression that there's something systemic in the system. And the message I think that should be clearly articulated out there is the fact that we can identify the challenges that Dubai Bank had, the challenges that Imperial Bank had, and the challenges that Chase Bank has had. And there is no commonality between them, which means that they are not systemic. They are specific institutions which are being addressed at the institution level, and therefore not affecting the whole banking sector.
All right.
So the banking sector is strong, it is safe and sound. So you should be very comfortable having your money in the banking system as we speak today.
Fantastic. Duncan, you're an investment analyst. Would you advise that the Kenyan banks are stable for us to trust them with our money?
Yes, just to continue the point that Habil has raised, the few cases we've seen in the market coming across Dubai Bank, Chase Bank, Imperial Bank, it has to be reinforced that they are very much isolated cases and doesn't inform the overall health of the banking sector. The banking sector has come a long way. If you look at where we were a few years ago, we've had new regulatory requirements coming in to continue capitalizing the banks, to continue to make sure that they have much stronger balance sheets, and this has gone a long way into actually bringing in banks that are much stronger. If you look at it from even from the tier 1 banks all the way to tier 3, you have banks which have demonstrated, and these are cut across nearly all the other banks, very strong capitalization levels. So in as much as these are cases which have actually impacted the economy in general, they are impacted individuals who have saved on it. The overall sense of it is they are in isolated cases and they are affecting specific banks. And the role that's going to be played further is just to ensure that we don't have similar cases coming in on board, and we're going to have proper mechanism to filter and know that this is a bank where we need to place a lot of scrutiny on.
I'm sure the theory of safety doesn't stick to Joram Mwinamo, who has had to be inconvenienced because he had an account at Chase Bank. Would he even bank with another bank after this inconvenience?
It's quite interesting when from a consumer point of view. There's a lot of noise around us. You hear a lot of statements of, you know, the banking sector is strong and the like, but the reality on the ground is that we've lost money. Money is stuck. There's a lot of uncertainty. You know, we have no idea whether Chase is going to be back up and running, whether we are going to get our money out. I mean, I've been a Chase bank, I think, for the last 8 years. And the interesting thing is that we had so much faith in the bank. We kept talking about, yes, maybe we should have another bank. But as an SME, they had very good services for SMEs. So we had 100% faith in the bank. Even at the time the rumors started coming out, a lot of us would hear the rumors and you're like, but you know, looking at Chase, how they've been growing, every message that was being sent out, that is you know, a very strong bank. So at the end of the day, when you start, you know, seeing the rumors speaking steam and you're trying to get your money out, the next day you wake up and the bank is closed. You know, it's a very emotive issue. Money is very emotive. So as much as there might be a lot of confident statements coming out that the banking sector is strong, the reality is that, you know, on the ground we have lost money. Very inconvenienced for us as a company. We've had to now start looking for an alternative. You've written out checks. People are waiting to get paid. You're waiting for money to clear. You don't even know if money got into Chase or it's still somewhere stuck in the system. So it's a very, very inconveniencing time for those of us who are Chase Bank. And I believe, you know, I had some clients who were also at Imperial Bank, and some people had moved from Imperial Bank to Chase. you know, just within a period of 1 year. So
jumping
from one bank to the next, and the same thing happens. It's very difficult to convince that person that the banking sector is safe.
And I mean, Habib, that is the discordance that we find ourselves into. That here, one side you have professionals like yourself and Duncan talking about the banking sector is stable, and unfortunately, that is not what the common Mwananchi sees, because when Dubai comes collapsing, when Imperial comes collapsing, and Chase Bank collapsing, I mean, the most rational thing to think is that there's another bank headed downstream.
If you look at the reason why Chase Bank was placed under receivership, was purely to protect the depositors. Because when there's a run on the bank, you have got to move in and safeguard the assets of the bank in which the depositors' money has been invested. And so Central Bank moved in, quite rightly so, to protect that. Now, given that the circumstances under which Chase Bank closed are different from the others, there's clear indications of the fact that things are being resolved and Chase Bank will be opened pretty soon if everything goes as per.
Paint the picture for us, and I'll stick with you for a moment. Dubai Bank, Imperial Bank, Chase Bank. If you were to separate the three issues, because you insist they're different, how different are they?
Now, let's start with the Dubai Bank. Because that was the first one to be placed under receivership. Dubai Bank, I think, the information had been out there in the public domain. They had court cases in court between the former CEO and the chairman, and there was quite a bit of information going out there with the fact that things were not well in the institution. So it did not surprise anybody when Central Bank moved in and placed them under receivership. Then you move to Imperial Bank. Imperial Bank was a case where the directors themselves picked up serious malpractices within the institution, and they brought it up to the Central Bank to report that there's something seriously that has been going on. Upon the death of the former CEO, it looks like the former CEO had control over everything, and he had hidden quite a bit of information from the board. So Central Bank moves in and finds that it's a little bit more complicated than they had thought about. So they have not even been able to establish the actual picture of what they have on the ground. So in that case, again, you have got to move in and safeguard the interests of the depositors that are in there. So that's a pure case of fraud. And fraud is a different issue altogether. Then you move to Chase Bank. Chase Bank, as we explained, there was a difference of opinion in terms of classifying the financial statements. The senior management resigned. That sends a message to the market. The market panics. There is the efficiency of the social media. The information flies pretty fast. People rush in, withdraw their deposits. And the deposits are so heavy in terms of withdrawal that Central Bank, in its opinion, sees that there is no way this bank can be able to meet its obligations.
Mm-hmm.
And so it moves into close.
Yeah.
Not because the bank had any other challenges. The challenges that were there would be things that can be resolved.
Mm-hmm.
In terms of a difference in opinion on how to classify items on the balance sheet,
Yeah.
that is something that can be resolved
Okay.
quite easily.
Uh-huh.
But the critical problem was the fact that depositors rushed in, got their money, and put Chase Bank at a risk of not being able to meet its obligations.
Oh, fantastic.
And so it moves in. So the three cases were extremely different.
Excellent.
And therefore, we cannot say that these cases are something that is reflective of the market.
All right.
And I was going to come back to his point about his money being locked up in Chase Bank, and the fact that from the information we have been receiving, there are actually many people whom I feel for who had their money in the bank. That's the only alternative they had.
Including units of our devolved governments, 4 county governments of 5.
Yes, and it's really sad because of the fact that it's not because of some fraud or something that was done at the bank that led to the closure.
Yeah.
And somebody would not have foreseen that this was going to happen because it's purely the market panicking, moving in, rushing in, having a run on the bank, and the bank has got to close.
Okay.
By the way, there is no bank that can survive a run,
Yeah.
for sure. If you have a run, it doesn't matter how strong you are, because you'll have deposits from customers, and those deposits are placed in assets that are long-term.
Okay.
So you'll not be having those assets in cash, liquid cash, that when a depositor comes, you can immediately pay.
Fair enough.
So you'll have taken some portion of it in liquid form, part of it will be invested in assets.
Okay.
So when customers rush in,
Yeah.
you can't be able to pay.
All right. Duncan, Habil insists there was no commonality in terms of, these 3 banks going under. But then, unfortunately, I see a vote in terms of the unethical practices, perhaps by the top management. Do you find a commonality yourself?
I think what comes in as a commonality is overall governance. Because,
Overall governance.
Governance. When you look at any institution, particularly within financial institution, and you always have a body somewhere that has to make sure that the governance for the institution is run, and these are the board level. Now, the question would go back is, are the boards for different banks or different financial institutions in the country well constituted? Are they independent enough? Are they able to carry out their practices without bias and with all levels of transparency? So that's the question that every investor wants to ask, every depositor wants to ask. Okay. And I think that puts our overall, not just within the financial sector, but I think in the corporate space, we really have to ask ourselves, where do we stand in terms of corporate governance? Well, that's key. If you look at the issues for Imperial Bank and Chase Bank itself, what stands out from our part is there are questions you'll raise on governance. Because Imperial Bank, for you to have a situation where an individual within the board level is able to run the bank in a more personalized manner, whereas it's a more of an institutional body, it raises questions. Right. And that's uncalled for. So at what point does the regulator come in and say, we want to ensure that we have overall transparency in governance? But not just the regulator, we even have shareholders. Particularly when you look at, we pay too much attention on the listed companies, where we say the overall function of, the overall enhancement of governance, it actually has to be upheld by the shareholders, who have to come in and say, we are electing in a new board, or a sound board that's going to ensure that all practices are met. So that comes in as the commonality across everything, and even cut across to still to Dubai Bank. That we need to be able to have even business continuity plans that are functional, that if one executive leaves, you're able to actually have an overall business continuity
succession.
Plan. Exactly.
Okay, fantastic.
One thing which is of essence also, particularly within Chase Bank, and I'll echo what Habil says, is time. Remember what Joram's case is, businesses have been closed. We know the ripple effect of, particularly from the SME market, which has employed quite a number of people. Businesses are having to close. People are going to be rendered jobless if this is not solved within the short term. And overall, it has an effect to how the economy grows. Remember, we are projecting quite bullish growth rates for the Kenyan economy, upwards of 5%. So how do you overall make sure that that's achieved? The banking system remains the mantle to achieve all the overall growth.
Okay. Let me understand from Mwinamo. in terms of how you got to get the news that Chase Bank has gone under? This bank you've trusted, that you banked with 8 years, is finally going under.
I think there had been signals in the, actually, I think for 2 or 3 weeks before the actual run happened.
So there is the immigration of the top management. Did they send a signal to you?
No. It was not from the bank. It was just, the way you get a social media message saying, we understand, or, reliable rumors say that this bank is in trouble. But actually that morning when it happened, I happened to be in a meeting with a client. There were also Chase bankers, and a call came in saying that the central bank governor is going to make an announcement. Chase Bank is going to be placed under receivership. This was at 9:30 in the morning.
You are in a meeting with fellow Chase bankers, let's say so.
And somebody says, I've received a reliable phone call. They did not tell us who it came from, that this bank is going to go under. This is 9:30 in the morning. So, of course, everybody panics.
Yeah.
Remember, everyone ran out of the room. All of us, I think even the employees had accounts at Chase. And everyone ran. And so at that point, there was no information, for us, the first thing you take to is probably social media. You go and look on Twitter and ask yourself, is there anything happening? There was silence. You go to the Chase Bank page, silence. You call your relationship manager. They tell you everything is fine. You have no need to worry.
Nothing to worry about.
But, the reality is people around you are running to close their account. So you ask yourself, am I going to be the one who will sit and wait for my money to disappear?
Yeah.
And the discussion the entire day, even for myself and amongst the directors, was, okay, is there something really going on? We're like, okay, maybe let's wait for an announcement. There was no announcement coming. And part of my dissatisfaction was that between 9:30 and 3, there was really, apart from a tweet from Chase Bank saying that everything is okay, nobody came in front of the TV screens or anything to say everything is fine. And by the time they came up to give an announcement, it was actually the announcement that came out first was resignation of the chairman and the managing director, which just sent further panic. And so in our opinion, we felt that the response to that was left us in uncertainty, made us even panic more in terms of how the flow of information came. And by the end of the day, okay, the bank is closed, you can't do anything. You wake up the next morning and you receive again another social media message.
Yeah.
With pictures of there were notices on the Chase Bank doors saying it's been placed under receivership. So if you look at that chain of events from a consumer point of view, despite the fact that there could have been messages going out, there was no reliable source that came out to say strongly. I think there was a
let me cut you short and ask.
Central Bank had I think a press statement at some point, and I think a journalist asked, is Chase Bank in trouble? And the response was very vague at that point.
From the central bank?
From the central bank. The governor, I think, was giving a statement about something unrelated, but somebody had asked about whether Chase Bank was in trouble, and there was a vague, statement at that point. So, in a sense, I in a sense, would, fault the response of the CBK and the bank itself in terms of not coming out clearly and stating what is going on. They could have been held up in meetings, but, we know these people have PR managers. So at the very least, there should have been very clear information, because as consumers, what we wanted was some sense of reassuring.
And I'm burning with this question because I want to ask, after what has happened to Chase Bank, do you feel cheated by the bank, that they told you everything was okay, they were on top of the game, but then finally they sunk?
So again, from the consumer perspective, and I hear these two gentlemen, say very nice words about how the banking sector is strong and the like. Probably the first time that I'm getting this kind of detailed information about the differences. Yeah. To us as consumers, the message that comes out is directors are stealing our money. And from what we can see, nothing happens to them. So, the discussion in plain English is put your money with the international banks. They have better governance practices. Because what's in our minds right now is, can we trust that directors in other banks have not been taking our deposits and offering themselves loans, which become non-performing and probably disappear off the books? There's even questions that the interest rates are probably very high because, somebody has to make up for that money that has been taken and it's recovered. So there's a lot of information flying around which may not even be steeped in facts, but as a consumer, you've lost your money and you're uncertain about what's going to happen in the future. So the truth is, I think there's very little
consumers know.
from a consumer point of view, there's very little trust in the banks, and even what has been happening since is that we are looking out for information that as to whether there's more data that will come out from other banks that will tell us whether other people in the banks are safe or not. But in the meantime, everyone has gone to the big, what we consider solid international banks or very big brands that people consider too big to fail. That's what as consumers we are thinking.
And I agree, because if another goes under her bill, perhaps we will all resort to pillow banking, which I'm sure nobody wants to go that route. But very quickly, because again, he talked about social media and the knowledge around consumers, because even if you look at a conversation on social media, it degenerated into mocking workers of Chase Bank, because the bank has collapsed, and yet there was not much information flowing again to the consumer to understand. So what you see is drama, and at the end of the day, what you're left with wondering is, okay, am I doomed as a customer? Let's take a short breather. When we come back, we'll be taking this conversation further and perhaps even discuss the central bank in terms of its responses, because on Monday, the Senate Finance Committee, headed by Bill Okero, lambasted the central bank, saying they saw these three banks, whatever the problem, they saw them sinking. Why couldn't they prevent Chase Bank from sinking? And most importantly, again, what are the measures they're applying to ensure no other bank sinks? The response of the central bank to this crisis. We'll be discussing that, as well as the financing facility that was announced by on Sunday by the central bank governor. And of course, later on, that is in this second segment, Captain Wanderi will be joining us. He's a lawyer and the chairperson of the Kenya Institute of Forensic Auditors. Perhaps you also need to hear from him on the state of the banking sector. Let's take a breather for now. Welcome back. You're watching Beyond the Headlines, and indeed, Captain Wanderi joins us. He is a lawyer and the chairperson of the Kenya Institute of Forensic Auditors. He will also be providing another perspective as regards the banking sector in the Republic of Kenya. But before we kickstart that conversation, particularly on the response by the central bank to this problem that we find ourselves into, let me introduce Jen, who is on standby with comments from social media as regards the banking sector. Jen?
Yes, remember we're talking about the banking sector and looking at some of the challenges facing our banks. And we asked you, as an account holder, do you think that your money is safe? Keep your views and comments coming in. And as you do that, let us go through some of what has already come in. We have Mrs. M on Twitter. She says, we vote in unscrupulous leaders and then ask them to support integrity in government institutions. We also have Uhuru Nomik also on Twitter. He says, wait until someone investigates the circles, then you will know the true meaning of fraud. We move on to a third tweet from George O. Ogalo. He says, why employ security personnel to guard the banks while the greatest thieves is inside in the name of the board of directors? Pointing fingers to the BOD. We also have Wamathagania also on Twitter. He says, these big investments coming up in the city and everywhere else mostly are not from clean money. And let's get a final one from Judy Awar. She says, the name of the bank says it all. They will kimbia with your chums and you will kimbiza them forever. Keep your views and comments coming in. Remember, we asked you, do you think that your money is safe? Our SMS line is 20511. On Twitter at KBC Channel 1. Hashtag Beyond the Headlines is how you can find us. And on Facebook, our page is Beyond the Headlines. Jacob, you seem very amused. Why don't you continue the conversation?
Thank you very much, Jared. I'm sure your kimbizaing is what Muinamu and his people are doing. And I mean, it's very disgusting, right?
Well, it's very unloving. The uncertainty, of course, keeps us in that state of anxiety. Yeah. So it would be good if we can, and if I was just to comment, I've been seeing a lot of press statements from the central bank and even the Kenyan Bankers Association and other banks have also been putting out a lot of statements. But what I think could be lacking is the voice of consumers who've been victims of all this, where a lot of the information we're seeing is very complex banking jargon. It's information where we cannot tell head or tail. We are just told, people are meeting liquidity thresholds and, receivership receivership and all these sorts of things, but as consumers, we really cannot tell what's going on. And that's probably one of the things that needs to change is these institutions need to know that they're not talking to investment bankers. They're not just talking to bankers alone. They're talking to us as consumers. They're even talking to mama mbogas who don't understand what is, going on, though they might have money stuck in there. So it would be good to just put it in very plain English that this is what is going on. These are the actions the central bank is taking. These are the actions that the bank is taking. But in plain English, tell us, are we going to get our money? Is our money safe? Is it going to be reopened? What actually is going on? Right now, are they doing an audit? There's not been a very good track record of receiverships in Kenya where at the end of the day, the institutions end up being closed, and that's what we know. So we are also very anxious as to whether is our money just being used to go through the receivership process, and at the end of the day, we are told there was nothing left, and we have to be left holding that. I think there's a law that says we only guaranteed 100,000 shillings, and anything beyond that is not guaranteed by law. So again, there's no clear information about what is going on and whether our money is safe, and that makes us even more anxious and more suspicious towards everybody.
We'll get to that one, but let me bring in Captain Wanderi. You're very much welcome. But definitely let's talk about the central bank in terms of how it responded, because earlier on, Mwinamo was saying the CBK, particularly in terms of placing the CBK, the Chase Bank under receivership, one was not even clear when the first day they were asked, even when there was anxiety amongst customers. And number two, the Senate Finance Committee has said they saw the Imperial Bank go down. They saw the Dubai Bank go down. They surely should have foreseen Chase Bank coming down and perhaps even protected, Chase Bank from going under, or even protecting customers at this particular point. Do you think CBK acted in due diligence?
Thank you very much. First, I want to agree with people that the fear and anxiety which has gripped the depositors in all banks in Kenya is justified for this reason. As it has been said by a previous speaker, the history of the receiverships in this country is a sad one. There hasn't been any situation where a bank has gone under receivership and then having been revived and back to operations. What has only happened in the past is that there has been a consolidation of banks that were placed under statutory management. But this time, several things happened. The auditors of Chase Bank raised a query on the accounts. Now, the law is very clear on that. That once an auditor of a bank raises a query and it comes to the attention of the central bank can intervene in several ways. It can even force the directors out, force managers out, or even take over the bank. But however, the drastic measures are not taken unless it is impossible to make the bank continue in operation. And the blame has been that social media and activists and bloggers are the ones who brought the bank down. What is missing from that statement by the central bank is owning up that the law in fact requires auditors to give that information to the central bank. In fact, the central bank already knew before everybody, because it is a function, it's actually a mandatory requirement of law that once an auditor notices something that does not add up in the financials or a contravention of the law, the auditor must notify central bank. So the central bank knew. They knew beforehand, before everybody, that there are problems there. They could have intervened in several other ways. They intervened in National Bank. And that is why you saw National Bank, they raised an issue of governance. And the directors then, because they have a responsibility of oversight, took over and had the managers sent out, suspended. But that did not happen in Chase Bank. And the bank was left to continue operating, giving a facade that all was well. And therefore, when there was a run on the bank and depositors withdrew their money, leaving the bank incapable of meeting its obligations for the previous day, so that its global position was such that it was not liquid, it was insolvent. Then the central bank ought to have intervened earlier, because once that they had notice of that anomaly raised by the auditors, why did they have to wait?
All right, fantastic. Do you agree with the point by Captain Wanderi that central bank should actually have nipped this in the bud?
Well, let's go back and see how do banks operate.
Yeah.
At any given day, by the end of the day, central bank has a record of everything that happens in every bank, in terms of what are the numbers in there and everything. So I think would have expected a proper coordination between the auditors themselves, the bank itself, and the central bank, because and to agree with what Wanderi is saying, there's no information loop, information hole across these three. Everyone has a defined responsibility on what they need to do. But what we can't really underscore is the fact that a bank run, when it comes, it's really a wave that once it starts tiding across the sea, you can't really stop it. And whether at that point central bank had seen it and maybe it was still at a wishy-washy condition where we're not really sure should we intervene or not, the depositors already themselves are getting worried. The social media functionality is also coming in, that there's a lot of anxiety coming in. So we have to go back and ask ourselves what ideally is the responsibility of each player. If the auditor's responsibility is to raise any red flag, the auditor needed to have raised the red flag. And it's true. We saw the numbers that were published earlier to meet the 31st deadline in March. They were totally different. In fact, with a missing caption at the bottom compared to what was published way after. So at what point do we stand and ask ourselves whose responsibility that stop at? And the central bank itself needed also to have asked these questions earlier. And the overall sense where we see it's much easier to close a boardroom than it is to close a banking hall. So most of these corporate governance issues which we've raised, and remember where we stand, we really firm on corporate governance, they need to be resolved way much earlier. National Bank, for example, 5 managers were sent home. A bigger number in terms of quantum compared to what we saw in Chess Bank, but we haven't seen much of a bank run on it. So that speculative nature of information, it's really what needs to be managed in the market. And the only way to do it is not really to tell social media as such to be thoroughly responsible and tone down or exactly what you're saying, but I think the regulators have, and the players themselves, even the banks themselves, have a bigger responsibility in trying to abate most of these issues.
And managing communication, because it was very important. Habil, you were stickler to social media, brought down Chess Bank. Do you feel there is a responsibility on the part of CBK that it should have nipped this thing in the bud?
I think if you look at what happened at Chess Bank, where, as Captain Onderia said, there was a restatement of numbers. Given that there was an apparent disagreement between management and the auditors in terms of the fair disclosure of the numbers, and so there was a restatement of the numbers, and coupled with that, there was a resignation of the senior management, fairly senior management members of the company. That's the chairman and the group CEO. Now, that in itself, already you are creating anxiety in the market, and that anxiety is then picked up through the very efficient communication system that we have now through the social media. Now, I think let's be careful there. We are not blaming social media for having brought down Chess Bank. I think it's important to underline that it's not that social media brought down Chess Bank. It is, I think, the new mode of communication, of the fact that if that communication is that efficient and the information is not accurate, in that it's misinformation, then it travels very fast and everybody gets that misinformation. People are bound to act on it and take the wrong decisions. And that's exactly what happened to Chess Bank. The whole idea about people rushing in to withdraw their money was because they were not having the right information, and so with the anxiety, they rush in to withdraw the money, and not because, we talk about restatement of numbers, and we are trying to put the blame on central bank. But I think what happened there was the fact that in all, with all hindsight, possibly central bank could not have seen or foreseen the fact that they could have led to a run. Differences in terms of management and auditors and restating the numbers, I think that can be resolved. Because it would happen in any entity where there is, the auditor insisting on, something, and management trying to have a different opinion, and then you align effectively. So those are bound to happen. But I think what had not been apparent at that point in time was the fact that this could lead to a run. By the time it became apparent, I think it was too late. And that's why Central Bank now had an option to move in and close the bank.
Okay. I'm sure Mwinamo wants to know, and the big question that he wants to know, and I'll give it to you, Duncan, is what happens to his money? When a bank is placed under receivership, what happens to his money?
The custodian of Mwinamo's money currently is KDIC, who are actually the receiver managers.
But he won't have a free access like he has had with
No. He won't have that free access. Remember, KDIC has been appointed to take over the functions of the current management and even the overall system functionalities. So as all of the re-audits are being done to ascertain where exactly is the loophole, how can we manage the asset liability match currently, are we able to see that everything has properly been accounted for? All within that, that's what KDICs are currently working on, under instruction from Central Bank, rather under appointment by Central Bank. As we saw the case for Imperial Bank, it reaches a point when a certain level of look of the books has been done, the banking halls will be opened, and either one, what we are foreseeing is one, either the numbers will be looked at and every situation has been solved, and all the relevant questions raised and answered, and then the bank will be opened to everyone to come back to function as a normal thing. But you have to remember and ask yourself, when the bank is reopened, are we going to see version 2 of the run? Is Mwinamo going to come and withdraw his cash out of it? However, you also need to understand that we have to ensure that we remain punitive at the point, we pinch harder where it needs to be pinched harder and remain softer where it needs to. If the situation at Chase Bank, which is true that it's much lenient than what we saw at Imperial Bank, can be solved much faster. And remember my first point, time is of essence. If it's solved much faster, we're going to see the depositors actually being able to access the cash. Remember, there's quite a number of banks also lining up to see that, can they be able to pick up the Chase Bank book, both on the assets and liability side. So if that will be called for, that they come in and pick it up, are we going to see it coming in much quicker? So I think it's a matter of now being left to KDIC, and we hope now, if we were to leave alone, if we were to forget about how quick or how fast they've been in the past, we really hope that they'll be much quick on this.
Mwinamo is smiling this smile of, I'm not even convinced in the first place.
I think there's a bigger issue of trust. We say that the entire banking system runs on trust. But when we look at history, we ask ourselves, what happened to directors of all the banks that went into receivership in the 80s and 90s? The truth is they walked free. Probably nothing has happened to them. Again, on that very social media, there's somebody who's been, doing an expose of what has been going on, in the background in the banks, and made a very interesting statement that the best way to rob a bank in Kenya is to own one. Because if you get caught, you'll just go through an inconvenience of going to the courts, but at some point, you'll walk free. We don't see anyone being jailed, and that makes us even more anxious, because we are like, if the system is such that laws can be broken and, people are invited to give statements. For me, if I was to carry out just a small, law-breaking thing in the streets, I would be bundled in the back of a Land Rover. We actually see the people who perpetrate these crimes are treated nicely. They are treated with velvet gloves. And that continues to perpetrate the mistrust. And that's why at the end of the day, some of us who are more exposed will say, let me put it in a bank that's domiciled in London, for example, the head office, because there we see people go to jail when they carry out something. But locally, we are yet to see serious actions taken on people who break these laws. We are yet to get the feedback that people who misuse our money end up paying for it. So
and I'm sure
that
Captain
mistrust
Wanderi
will
will be
continue
responding to that
unless those situations are dealt with very firmly.
Captain Wanderi will be responding to that right about now. Wycliffe Gori is in the streets, and let's see what Kenyans have to say as regards the status of the banking sector in Kenya. And Chase Bank, people are worried. Let's see that.
The news of Chase Bank being placed under receivership was received by Kenyans with different reactions. Actually, most were surprised. Now, stepping into the history lane, Imperial Bank was placed under receivership, Dubai Bank followed, and now Chase Bank. Now, the question I'm asking Kenyans here is, do they trust the Kenyan banking system? And who should take the blame for the receivership of these three banks?
I'm a Kenyan. If I don't invest in my own economy, then who is going to invest in it? Yes, but truth of the matter be told, I am a skeptical Kenyan. I do not want the bank that I'm currently banking with just one morning to be told that we've been put under receivership, so I cannot receive my money.
How can we trust the banks that are messing up always here and then?
I have a lot of trust in the Kenyan banking system because these are the banks we've been using from time immemorial. And I personally believe there was more than meet the eye in the Chase Bank circus that we have been treated to.
We need to trust our institutions. Just like we are saying, buy Kenya, build Kenya, we also need to trust our local banks.
Most of us, like the common mwananchi, we do not understand what receivership is. And what we are seeing on the headlines every day is something is being done. How quick?
Tutakataa kuweka pesa kwa bank kwa sababu banks zinaanza kuchezea sisi wananchi.
After a while, all this will quiet down and we'll have a stable banking system. And the faith of most Kenyans will come back. And right now there's that apathy towards banking and people are thinking twice, thrice. But it's still the best place to keep your money.
I would rather have them underneath the mattress because if my money actually can be frozen that way, I can no longer trust the banks because at the end of the day, my hard-earned money might get lost.
I'll start with the governor of Central Bank. There is no way for a whole quarter year he didn't know what was going on with these small banks. He must have been privy to everything, but it's like somebody was setting somebody to fail.
Now, whether the government is supposed to be blamed or not, I don't think so. Personally, I think I'd tell the directors to either ship up or ship out, because at the end of the day, I trust you with my money. I expect you to do a good job.
I blame the government. I think the government should have put laws so that depositors' money is always safe.
The board of governors, they are squarely to blame because they come up with policies, and even if they're not the ones who come up with policies, they're the ones who approve those policies. So if there's something that was at fault, that didn't quite work, it is the management that is squarely to blame for this.
Kenyans have spoken out their minds, and at this particular point in time, it is only important for me to hand you back the program in studio so that the panelists can also react to the same.
Thank you, Gori. You also got an advocate of pillow banking there, saying they can't trust banks to keep their money. But Captain Wanderi, again, this inconvenience is being caused. And when you look at the banking sector, because it's something that is upcoming there, do we have hope? And the question is, are there more banks headed downstream?
That's a very loaded question. Yeah. Let me first comment on what Mwinamo said.
Yes.
About the issue of trust and confidence. Now, at the moment, the whole banking sector in the country is going through a session of crisis of confidence. And it is simply because of a few issues. Yeah. One, integrity, ethics, governance, and oversight. Yeah. That's period. And that is that. Now, you've heard Kenyans and comment that they cannot trust banks anymore. Why can't they trust banks anymore? Let's go back to the law. The Central Bank, the Banking Act is very, very clear that if bank directors and senior management and what we call significant shareholders, that is people with very big shareholding, as well as those with controlling interest, people who are not directors or shareholders, but they are associated with groups that control the bank, either as holding non-participating, what we call non-participating holding companies. They are not participating in management, but they are the holding company of the bank. Yeah. If they were to take loans, unsecured loans, it is actually a criminal offense. And Mwinamo is right to the extent that banks in this country have collapsed because of insider lending. Insider lending.
And Chase Bank flouted that, yes, absolutely.
Yes, and that is the reason now you have a crisis of confidence, because as Mwinamo rightly says, you have people who are treated with velvet gloves. They go to CID headquarters in limousines to record statements, like it's a show, and then walk home, and the small owners, the depositors of that money, the people who've struggled in the markets, to earn that money cannot access it. That is the reality of the matter. Let's go to the other aspect. There has been a comment by a Kenyan that the governor knew what was happening in the small banks. In June 2015, the Cabinet Secretary for Finance laid before Parliament a law that requires all banks in Kenya to increase their capital threshold to 5 billion.
Yeah.
The reason for this was to cushion depositors, to avoid the kind of crisis we have now.
Yeah.
Because there has been history in Africa. That history began in Nigeria between 2009 to 2011, where 8 banks were placed under statutory management of the Nigerian Deposit Insurance Corporation by the Nigerian Central Bank. And the government was forced to inject 2.1 trillion Nigerian naira, equivalent to 1.07 trillion Kenya shillings, or $106 billion to save those banks. And then subsequently, the government, through a statutory mechanism, forced some of those banks to amalgamate and to create one big institution that is capable of withstanding the shocks of the market, like we have in Kenya. Now, why was the law passed in Kenya to require these banks to have that threshold? It's because there are certain ratios which are very clear, that you have a loan book versus the capital, the core capital of the bank. There is a threshold which the central bank, the Banking Act, requires to be maintained, and the central bank has set those figures. Now, we have small banks here which are tightly controlled by either families or close individuals doing other business. And these individuals then have other companies that borrow from those banks. And that is a situation
Habil doesn't seem to agree that you're speaking about this thing.
That is a situation we saw in Imperial Bank. And there is information even in the media. In fact, information which is publicly available of companies that have had issues with government on matters of financial distress, who are then loaned heavily by the same small banks because the directorship is associated, increasing the association risk for those banks. Then, because those banks are also controlled by the same directors, they appoint managers who are complacent to that kind of behavior. Again, you bring in managerial risk. And once again, you have the same companies that are borrowing from those banks with a litigation history because of incapacity to pay their financial obligations to other players in their respective industries.
I'm not concluding for you, but you're saying this is not the end of it, because we still have other banks that are being run by families.
Basically, what there is that until unless the governor of central bank puts his foot down at this moment and says the law gave the banks 3 years to comply with that capital requirement, but which bank is giving a timeline on how they intend to comply? So far, only 2 banks have gone to the market to try and raise additional capital. I know we can't name them here, but there are banks that are raising additional capital. But you also need to know that once you want to raise additional capital, then you subject yourself to a serious forensic audit, a hostile audit, for purposes of due diligence, to carry out proper valuation for the investor to know what he's buying into. And that is why the CBK governor then must insist that these banks give clear timelines before 2018 on how to comply. If they do not, then we start the risk, because if these banks are allowed to continue in that manner, what will happen is that by the time we get towards 2018, there will be shells, because nobody wants to buy something they're not sure.
Hold it, Captain. Let's engage
the
chairman. Because, I mean, the point that is being made by Wanderi here is you painting a picture of a stable banking sector, but he's saying until these measures are put, perhaps this is the last. We've seen Chess Bank instead of the last.
Actually, I think what the captain raises are, we need some clarity there. In terms of capital adequacy, in terms of the capital ratios and all that. Because, you see, there are 2 things it has raised. One is the proposal by the National Treasury to increase the core capital from 1 billion to 5 billion. It was a proposal that was put before Parliament, it was debated in Parliament, and it was defeated. So it never really saw the light of day, so to speak. So as we speak today, the law still requires banks to have a minimum of 1 billion shillings. The other one was a proposal. 2, banks have got a maximum level of balance sheet that they can have based on their capital. So there is a ratio of the assets that you can load onto your balance sheet based on the capital that you have. So the capital has got to be at a level that you can support the risk that you're taking on the balance sheet. Now, we're trying not to be technical, because we know that the viewers are...
they want to understand this language.
Basically, the thing is you can put loans on your balance sheet, and you must have adequate capital from the shareholders to support the loans that you are supporting on the balance sheet. Basically that. So the smaller your capital, the lower the the loans that you can have on your balance sheet to support. The bigger your capital, the more loans you can give out on the balance sheet. Basically, that's what it is. So it matters not whether you're a small bank or a large bank. You have got a limit in terms of, depending on your capital, how much assets can you have on your balance sheet. And all these banks go through the same rules, regulated by central bank, and central bank ensure that they actually keep within those rules. Now, talking about the capital, because what you're basically doing here, we're trying to profile banks. So we are trying to say that the smaller banks have got some challenges.
Isn't that the case?
And clearly, Chase Bank was not a small bank. Chase Bank is a medium-sized bank. I think in terms of order of size, it could be somewhere between maybe 11 to 13, in, 11. In terms of, and we've got 43 banks that are ranked. And so in terms of size, Chase Bank is 11. That's not a small bank. Imperial Bank, I can't recall the level, but it may have been a bit smaller than Chase Bank, but it wasn't a small bank either. It was a medium-sized bank. So the point I'm trying to put across is that I'm trying to profile, banks on the basis of some characteristics, and then trying to project that therefore the other banks that meet these characteristics are having the same challenges. I think that can be questionable. I don't know whether the captain will do. Yeah, I mean, with due respect, I think there are challenges, yes, that are specific that can be identified with the small banks, which are things that can be put in place and can be addressed at the specific institutional level, where they have got specific challenges. But I think to attribute the challenges that the industry is having currently to the challenges that the small banks have, and therefore now profile and say that it's affecting all banks of this particular nature, I think that may cause unnecessary misinformation to the public.
Okay.
What I have said, I want to correct the impression that we are talking about size here. I raised the issue of integrity, ethics, governance, and oversight. And that is what Habil perhaps and his colleagues in Kenya Bank Association, because I have had members, senior members of that association talk about it also, that you have a situation where some of the banks being mentioned, I said, are tightly controlled by associated groups. Now, we have a history in this country of, if you have a bank that is run by people who are directors of a company, which has been in the past been associated with issues of tax evasion, money laundering, and financial crime, then we need to be worried. And as much as people may want to deny, I am a forensic auditor. It is my work for when somebody tells me do due diligence for me to look at publicly available information on associated companies and risks and their litigation history as well as their financial history. And once you see that a director, in fact, a major newspaper in Kenya reported that already we are forgetting that apart from Imperial Bank, Dubai Bank, and Chase Bank, there is another bank in Kenya that was never dissolved or wound up, Charterhouse Bank. And Charterhouse Bank remains a bank as long as it is not wound up in law. It is closed. And it was associated with other issues. And there are companies that are in court with issues relating to that bank, and their directors were also directors of some of the currently collapsed bank. Then, therefore, we are talking an issue of governance and ethics. And the central bank, the Banking Act is very clear that it is upon the central bank to ensure liquidity, solvency, and proper functioning of the financial market, as well as to ensure there is moral and professional probity of people who serve as directors and managers of banks. It goes back also to the association. When you have an association for bankers, it should not just be a lobby. It should also be an association that also enforces rules with a code of conduct and regulations for their members. Because you will agree with me.
You're saying they don't have that?
I'm not sure they have, because he hasn't said that there is a way they're able to look at these directors and tell them, you being mentioned you are a director of another company associated with other collapsed institutions or closed institutions, then you should step aside. And the law is clear. The central bank can actually force such directors out. I'm still wondering why the governor had to wait for that long for newspapers to raise that issue before asking those people to step aside.
And I'm sure Habi will be responding to the issue of ethics. But of course, perhaps from you, paint the picture for us in terms of the inconvenience. And most importantly, again, is there much information to the consumer as to what bank you can bank with in terms of stability? These are the risks you need to know about such a bank. These are the risks you need to know about such a bank before you bank with it. Is there much information to the consumer as regards that? Duncan, very quickly, of course, as we talk the future of banking. Are we stable? Can we trust it? Is there hope?
Yeah, for the future of banking sector, I think we are moving to a much more stable phase. Remember that the capitalization discussions which have been there, it's actually for a natural process to be allowed to move these banks to a much more stable state. We don't want to put regulations that will be able to cut out banks or cut out participants, be it even at MFI level, at a circle level. No. Want to be able to put in regulatory requirements that will naturally assimilate these banks, and that's what we are projecting and foreseeing coming into the future. A naturalized way of amalgamation, a lot of mergers and acquisition coming in to strengthen the industry. But I think what we are looking at going into the future, into a much more stable banking system, corporate governance. Corporate governance is key. We want to be able to see a much more transparent and open framework for governance. The issues raised on ethics and integrity abilities of the different board members and management needs to be well spelled out, and it's something which we are calling on for, that it needs to be emphasized. And remember, the backstop to the Central Bank of Kenya is actually the main regulator and the main enforcer of the law.
What we hope to see going forward is getting that trust back and banks being able to play their role in economic development of the country.
Thank you very much, Habil. Unfortunately, we've run out of time. It is interesting. This conversation can continue and continue. But then, Jen, thanks again very much for the good job played on the other end. And of course, it has been an interesting conversation, 1 hour.
It has indeed been a much needed conversation in terms of shedding more light and giving us a way forward when it comes to banking. Unfortunately, we're running short of time, but the conversation does not end here. Keep talking to us and letting us know whether you trust that your money is safe in our banks. Our SMS line is 20511. On Twitter at KBC Channel 1. Hashtag Beyond the Headlines is how you can find us. And on Facebook, our page is Beyond the Headlines. You can also send us an email. Our address is bth@kbc.co.ke. My name is Jane Wamboy. Do have a lovely evening.
Thank you very much, Jen. Thank you very much, Habil Ulaka. Thank you, Duncan Lumamu. Thank you, Joram Winamo. And thank you, Captain Wanderi, again for coming, and all of you giving us a perspective into the issues of banking. There is hope, but most importantly, people like Joram Winamo are still asking answers. They need their money. Thank you very much for joining us. Enjoy your night. My name is John Jacob Curia.